My name is Caroline Karanja. I'm the Chief Executive Officer of the Association of Microfinance Institutions. AMFI currently, from the 5 founder members, has 56 members, and the institution has various categories. We have around 14 microfinance banks who are licensed under the Microfinance Act, and they are regulated by the central bank. We have the non-deposit taking microfinance institutions who are the majority, and they take up actually the rest of the membership, with a few wholesale lenders. We have 3 wholesale lenders in the association, and 2 developmental partners and 1 SACCO on board. So the membership is diverse. The association gives services to its members, and it is through 4 key pillars, 4 objectives that we are able to serve these members. One being advocacy and lobbying, and this is where we work with the regulators and the necessary stakeholders to ensure that our institutions are operating in a conducive environment with the right regulatory frameworks in place. The other one is capacity building, where we are able to fill the gaps for our members and their clients in terms of addressing some of the capacity gaps they may have through trainings, through webinars, through forums, and we are able to address these particular issues. We also have networking and linkages, and this is where we are able to actually bring together stakeholders or investors or partners who can come and work with our institutions to strengthen them and grow their businesses. We are able as an association to be able to identify those partnerships and then link them to our members. We also have research and knowledge management, and this is where we are able to collect sectorial data, which is able to inform us on some of the gaps that could be there, be it the 3 that I have identified, like lobbying, the capacity needs, and based on that we are able to identify which areas we can work on, and also develop and produce sectorial reports that are able to also measure the performance of the sector. Basically, that is an overview of who AMFI is and how we achieve our mandate to serve the members who are in the association. The non-deposit taking microfinance institutions play a very big role. First of all, they are institutions who are not licensed under this Microfinance Act. According to the Microfinance Act, the Cabinet Secretary, National Treasury, is to prescribe regulations that govern these institutions, which we are still hoping to get to finalize that process, because these are the institutions who have now been left out of a regulatory framework, and the regulatory framework, once is implemented or put in place, our credit-only microfinance institutions or the non-deposit taking microfinance institutions will be in a better operating environment, because this will bring conduct to the market. It will get rid of the predatory lending that has been there. It will ensure there's consumer protection in the environment. So there's a lot that can come through, and being in a regulatory framework also attracts even investors who can come in and support the institutions for business growth, and they would be able to, of course, reach out to more clients by growing their businesses. One of the unique features of the non-deposit microfinance institutions is their way of giving credit, or how the clients access credit from the institutions. One being because they are based mainly in the rural areas, and of course in the urban, but mostly the ones in the rural areas. As a community, they are brought together by these institutions to form groups, and we call this the group lending methodology, where they are able to bring them together in groups of maybe 15 to 20 people who are in the same community or the same marketplace, and they can sit and they are brought together, and for some time they will go through some training. They go through a financial literacy training, where they're able to understand that the importance of taking a loan how to actually utilize that particular loan to the required need, and not deviate the funds to other causes, but to ensure that the loan amount taken is through that is for the specific need, either the business need that will grow them. Then after the training, they are able to, and this training is normally conducted in the presence of their officials whom they elect within themselves, and then the credit officers from the particular institution. Based on that, they are now extended for credit to assist them in whatever need they may have, and they are able to co-guarantee each other. So the purpose of this is that co-guaranteeing, and even during the training period or the period that they are going through the induction, as you may call it, they are able to also know each other and get to trust one another. And most of the times they're probably in the same marketplace. It is a good way of bringing the community together to do something that is beneficial to them. So that is one unique aspect about the non-deposit taking microfinance institutions, because they give not only the financial services but also the non-financial services that are there. What we are asking of our regulators and our stakeholders is that we are appealing to them, because since the enactment of this Microfinance Act, we have not had a regulatory framework for our non-deposit taking microfinance institutions, and there are a few pain points that are there, because for example, at the moment, the CBK Amendment Act has included the digital lenders and actually developed regulations for them. And the feeling of our central bank is that credit-only microfinance institutions should be encompassed in these regulations. However, as an association and as an industry, we feel that there are various differences between digital lenders and the non-deposit taking microfinance institutions, and hence should not put us in the same umbrella of regulations, because even the operation of the businesses are different. As microfinance institutions, one thing that we use is the digital channel just to actually deliver the loans. There is the human contact that we have that the digital lenders don't have. When a client comes to apply for a loan, they'll sit and fill up forms. There's that contact, as opposed to a digital lender where you go to an app and apply for a loan. So there's that human contact, and the only actually digital platform they use is when they're disbursing their loans or making their collections. So to our appeal to the National Treasury and the Central Bank is to actually fast track the process of putting together our regulation, the development of our regulations, because this way we will be able to have regulations that they conform with the sector and the people we are serving. That's what our appeal would be for now, and we are happy with what we've been able to achieve so far through the National Treasury, because there is an interagency committee that was formed and has been working on this particular regulation.